ladies and gentlemen. How do you do today? I'm your host, Seth Julian. Welcome you to today's briefing. We're going to take a look at Great Britain. We're looking at the FTSE 100 here, and we are looking at the pound sterling, dollar pound sterling here. The reason I focus on the UK today is because the Organization of Economic Cooperation and Development, aka the OECD, has come out with a growth projection, which they do twice a year, and they've raised their growth projection for world GDP output. And that is because the inflation situation is starting to slow down. That is to say, the interest rate rises have started to rein in inflation. The winter season has been mild in Europe, thereby keeping the energy crisis somewhat in check. And therefore, growth expectation. Oh yes, and China, of course, has ended its disastrous zero tolerance policy, and so China is starting to open up. Now, what this means is that economic activity in general is going to pick up. However, the reason we're focusing on the UK today is because the report made specific reference to the fact that the United Kingdom is the only member country of the OECD, that is expected to have a gross domestic product decline. And that's for the reasons that we mentioned above. The UK is suffering a terrible energy crisis like the rest of Europe. They're subject to the same tidal forces of economics and finance that buffet the rest of the world. However, they are also carrying an additional burden called Brexit. Now, what I want to point out to you is this. This is a chart of the cable rate, pound dollar cable rate. As you can see, its long-term secular trend is clearly down. If we just take a look at what's going on in the daily chart, we can see that the long-term secular trend is down. Note with the particular since the beginning of October, it's been up, and this is due largely to U.S. dollar weakness driving the cable rate up. We think this is going to reverse very shortly, and it's just currently, as you can see on the daily chart, it's just kissing the 20-day moving average. It's going to likely break the 50 and the 50-day moving average, the 200 and the 50-day moving average, which are at this moment identical in the daily chart, and we think likely to continue down as dollar strengthens with tonight's interest rate announcement. We also see that the FTSE 100 is also sort of on the fall. Not sort of, it's falling. This rise, which has been continuing all over Europe, in fact all over stock exchanges around the world, is due to the fact that inflation seems to be coming under control thanks to interest rate policies of the central bank. Monetary policy is starting to have an effect, as well as the weak winter in Europe. This is going to change in our opinion. And let me emphasize the nature of our opinion. It's speculation, and we could be wrong. And therefore, you have to do your own homework and research these positions as you see fit, such that you can be committed enough to take a position with your hard-earned money in these assets, and be prepared to lose. Because lose we do, we all lose. You can't make money in this business without losing money. So projections are wrong sometimes, signals are incorrect sometimes, and therefore we have to be prepared for that by speculating with capital. We can only with capital we can afford to lose. So that having been said, ladies and gentlemen, we think that the UK 100 is in the process of a reversal now. We think that the pound dollar is about to reverse this short trend from early October and continue its secular trend of decline. And that's how we see the market, ladies and gentlemen. That's what we think. That's how we trade. I'm your host, Seth Julian, wishing you all, ladies and gentlemen, the ability to trade with confidence. Bye-bye for now. Khalas for now.